the Treasury Bills markets here in Nigeria traded with mixed sentiment on the back of the 45 billion naira OMO maturity, which was injected into the system on Thursday this week. Adamma Mbachu, team lead currency trading at Axis Bank, joins me for a weekly update on activities at the fixed income market. Adamma, thank you for taking the time out to join us today.
Thank you, Esther.
It's been quite the week for the market. Bring us up to speed. Let's start with today's trading action first. Where are we in terms of starting across the different segments of the market? What are you seeing so far?
Okay, I'll start with what you said about the fixed income market, where the Treasury Bills market traded with a mixed sentiment, and this was attributed to the expected NTB auction that actually happened this week. Although there was an OMO maturity of 45 billion, the maturity of the NTB at 295 billion into the system was actually taken up again by the DMO, where the DMO sold the same amount across all the standard maturities. However, we saw the stop rate come out slightly higher, 50 basis points for the 91-day and the 182-day at 3 and 4% levels, while we saw a significant hike in the one-year maturity at 105 basis points to close at 8.5%. This actually attracted mixed sentiment, and currently we see the secondary market trading at these levels, 8.3% for the one-year maturity. Moving into the money market, we saw this actually play out in the money market because there was so much of funding obligations by the participant owing to the NTB auction debit and other funding obligations as well. So despite the OMO maturity of 45 billion in the system, we saw the average overnight day rate and OPR rate trade at 14.5% to 15% levels.
Let's take a few steps back. How would you describe what is to be said about the yield curve in the last 2 weeks in terms of trend?
Oh, in the trend, we have seen a bit bearish sentiment actually maintained in the market, and as such, we saw the yield curve actually going higher because people were actually selling down to meet up their obligations. So we saw a lot of sell-offs in the market, and which actually caused the rates to trend higher.
So what can we expect in the coming week? Before we go there, quickly talk to us about let's go to the FX market. We're still seeing some pressure on the Naira, 430, I believe, at INE, and somewhere around the similar levels at the NAFEX. So what can you tell us? Yes,
the pressure is actually sustained, and it has been persistent for quite some time now. The Naira has always been under pressure due to the illiquidity in the market, and we have seen so many reactions such as that. Actually, most business operations are actually coming down in terms of their business activities due to the unavailability of the NAFEX. For instance, we have seen most airlines threatening to shut down business operations in Nigeria due to the inability of the federal government to repatriate their funds. So we have seen immense pressure in that market. However, the central bank has maintained their interventions in the invisible market and the SME market as well. And we intend to see if the Central Bank of Nigeria will try as much as possible to see how they can create some sort of respite to restore economic activities in most of the key sectors.
Right. Let's talk about the coming week. Liquidity levels. What should we expect from the market? Any mop-up activities? Any auctions from the DMO? What should we expect? Or what's on the timetable?
The main thing is the FAC inflow, which is expected to come in next week, and so we can see a bit of respite in terms of liquidity. We're expected to see an inflow of about 600 billion injected in the system, and then as such, which will actually make the rates actually to trend a bit lower